Tyche traders, welcome to the Energy Watch for 24th of May. We're going to start on natural gas. It's been a bit of the player over the last few weeks watching this one. Normally, the injection season would lead to much lower prices over winter. In fact, there's a premium. Main reason is that the inventories are so long after a prolonged winter, especially towards the end of it. That there's obviously a bit of worry about supply constraints. Even with the injection season, there is concern of just how much production there needs to be to get an ample supply up for next winter. So I wonder if the pricing is really more about now or more about the future. There's normally a winter spike, obviously with demand for heating. There's also a secondary smaller spike, normally in summer for cooling. A lot of power stations, though, they can easily switch between different power methods. So it depends if natural gas is going to get too expensive, if they'll switch to cheaper alternatives, and how that's going to affect demand and then the inventories, and then the weather as well. But at the moment, the weather has less of an effect on natural gas as the inventory. There's a report coming out in about 3 hours from the EIA, and I think that's really going to tell the direction of natural gas for the next week. At the moment, there is a little bit of a drop down on the 4 hour. I think that's more just people positioning before the EIA. We had a rollover last night into the June contracts as well. On some platforms there was a sizable jump in that as well. So you can see we've had this trading range. There's bottom support here. I've drawn a future fib of what may happen moving forward, what we're looking at in the ranges here. Basically though, I think this is more going to be, the market's really going to be defined by this EIA report. If we can get an injection over 100 BCF, that's going to be, I think, a driver for bearish prices. But also, I wonder how many. There's a lot of longs in the market at the moment. Is that sustainable to drive prices much? Obviously, bulls want this $3. I'll put it up here for you. They want this sort of $3 target, a psychological barrier. I've seen a few times where it's hit that and come down again. So this rally between $2.90 up to $3. I think though that if the inventory shows quite a reasonable amount of injection and a lowering of demand, you're going to get in this between this $2.80, $2.90 range. As much as I said the weather doesn't affect it, obviously demand is going to affect the price as well. There's higher than normal weather at the moment in US. Increasing normal cooling demand, but the first few weeks of June at the moment are slated to be about on target. So if production keeps up, obviously with the high oil price, there's a high oil rig count at the moment. The byproduct, or well, it's byproduct, but the other product of the rigs are natural gas as well. Very robust production. So I think that if demand comes off, if production goes up, you're going to see the bears really take control. And I think you're going to get back to $2.70, $2.60. But if the injection season can't put enough inventory in there, I think we're going to see very high natural gas, especially as we get into the late summer, out of the injection season, and then if they're towards the end of the year where that's going to sit. It's a long-term approach, but the market's definitely looking like that. And if it thinks there's going to be lower inventories down the track, it's of course going to price that into now. So looking at the moment, I'm a little bit bearish at the moment. I just feel that if you look at the RSI here, natural gas is at the moment a little bit overbought, and I think it's not going to take a bit of good news with inventories filling up. I reckon that price is going to smash right down again. So at the moment, what I'd be looking for is, it's hard to recommend a long where it is at the moment, but if it does get up to $3, I'd say looking at a short. Remember, a lot of platforms will give you a nice little credit, finance credit on your shorts as well. So if it gets to $3, minimal equity, as always, equity management. If you're shorted around there, even if it goes up, there's a high chance it's going to establish a trading range somewhere between $3 and $2.85. For that one. As for if you are shorting at a target, if you're going to short it from here, $2.85, $2.80 is nice easy target. Getting under $2.80, I think the $2.80 is going to be defended quite well. There's a lot of support before it was resistance, and then I always find that once resistance becomes a new support level, that's quite strong. Now on to oil. Oil, basically WTI is down because the inventories were actually up. They were expecting a draw on inventories, but there was actually an injection. Part of that too was that gasoline refineries didn't take as many orders, so you can see that it's right down to this fib level here of around the that's about the 70, just under $71, 70.9. Even with tensions, it's reaching the point of oil. I know people were saying, oh, it's going to hit 75, 80. Well, Brent already has, but WTI, but I wonder how much upside there truly can be because there's just so much production going on at the moment. And even with Venezuela offline, other countries are filling the gap, and then even OPEC is saying now that it may increase the production even against their own sort of idea to lower it. So what I'd say at the moment is I'm really waiting for a nice bump up to get into oil. But if this RSI, I mean, at the moment we've got 34, which for oil is quite low. But if we get something under 30 of an RSI for oil, it's hard to even then recommend it when we've had this like nice rally. I think probably a safer bet than oil is to look at gasoline, one of the distillates, because heading into the driving season, there's normally a higher demand on gasoline, and the prices have really struggled. I've got the daily coming up. So on the daily, you can see it's really had this nice run up, that reaching a high of around the $2.28 on plus 500, and it's come off since there. Let's get down to the 4 hour. So you can see that it has struggled a bit more to get some headway. So what I'll be looking at, if it gets up towards this $2.27, even as high as $2.30, to maybe shorting it. But I think there's a lot of support. I mean, if it does for some reason bump down to say $2 even 20 around there, I'd be looking at that as a buy indicator. Summer generally is the sort of more driving months for America, which adds to support to gasoline prices. So if there is a drop down, even with the low oil price, I would suspect there's still oil price is still up, gasoline price likely to still stay there. And then just on to Brent. Brent's obviously a little bit the same as W2I, but hasn't broken down as much because it's not as affected. I mean, it is a little bit, but not as affected by the US inventories. And then if we just draw this trend line, sort of bouncing around there, I'd probably at the moment go more Brent over WTI. Just to me, it looks a little more of what's going to happen. If there's an increase in prices, you probably get this nice retest around the 80.8 heading towards 80, 81. But I think it's going to have to get, where's 80.5? Here we go. So here's 80.5. I think this is a level we're going to have to get through for Brent to sort of sustain any sort of rally and hold above that. On the downside, it's almost, if it breaks through this trend line, they've got these fib lines. Who knows how far it can fall from there. So at the moment, overall for oils, I'm waiting on a bit more of an indication of a large breakdown with a low RSI to get in, or something to the upside more to give me some more confidence in shorting it. And then mainly keeping an eye on natural gas and these EIA storage reports with demand. If I do notice that the inventory is building up faster than what's being expected, the price is going to, I think, go down very fast. But I think the upside's limited, given that even with high demand, the power stations for cooling demand have other resources available. I think over $3 is where it's going to be tested. Definitely can get there, but I think over $3 is where the upside after that, unless there's some sort of major outage at a pipeline or something, getting higher than that, it's going to be an interesting one from there. As always, watch your equity and happy trading.